give you the markets update now. The JSE facing green screens today after U.S. markets rallied despite the latest U.S. inflation data coming in hotter than expected, making it likely that the U.S. Federal Reserve will raise interest rates again next month. Matete Thulare is head of foreign exchange execution at Rand Merchant Bank, and he joins us now for a quick update on how the JSE is performing this Friday in early trade. Mr. Thulare, thanks for your time. At some point yesterday, the Rand slumped to its weakest level since the year 2020. Talk us through the currency's overall performance. What's going on with the Rand?
Good morning, Colin. As you say, the Rand has been hit from all angles, and I suppose, just from an offshore perspective, the sentiment has been negative right through to a local issue perspective. Already when you just look at the minutes from the Federal Reserve on Wednesday evening, they showed that officials there agreed that they need to increase interest rates even more than what is expected at this point in time. Already for next month, we're expecting a full 100 basis point increase from the Fed. Obviously, they're trying to make sure that they meet their goal of lowering inflation. They've said that it's broadly unacceptably high. And already just yesterday, seeing the US CPI numbers, that advanced to a 40-year high. And that is underscoring the persistent elevated inflation that's obviously squeezing households, and that is going to push the Federal Reserve towards another steep interest rate hike. As I said, another 100 basis points hike for next month, and already for the next two meetings, the market is anticipating another 75 basis points worth of increases there. And already that CPI number from yesterday, that sends a hawkish message in terms of the persistent price pressures that we're seeing globally. And I think this is obviously why you've seen even the Rand weakening to an 1855 high yesterday. But if you cast your mind back to 2020, at the height of COVID, we got up to 1935. So we've still got a bit of way, but at this point in time, even if you look at the local sentiment, I think issues that we're facing, potentially around the grey listing that we've seen, we know that there's issues around Transnet. That's obviously going to affect the fiscus and what Minister Godongwana is going to table already in the next 12 days on the 26th of October at the medium-term budget statement. And also, you overlay that with obviously the Eskom supply issues in terms of load shedding. It just capitulates and makes it a huge cocktail in terms of all the negative issues that are facing the Rand and obviously financial markets. On a year-to-date basis, the Rand has already lost about 12.5% against the dollar. So it just shows you how much negative all these sentiment and obviously footing that we've lost against the dollar on the back of all these global issues, including the geopolitical tension that I think now we're entering into the 8th month in terms of what's happening out in Russia and Ukraine.
Let's talk commodities for a moment. Oil prices reversing earlier losses and inching up together with gold, but still on track for that weekly fall. What's driving the market moves there?
So look, it's quite an interesting space in the commodity space. If you think at gold, it's headed for a weekly loss, especially after all these hot inflation numbers that is obviously signaling aggressive rate hikes from the Fed. But also gold has been pressured by a myriad of factors, including the strong U.S. economic data. The Bank of England's move to remove emergency support by today has lifted the dollar and obviously made gold retreat. I think the Fed's aggressive hikes this year have already hurt gold. That has sent gold tumbling almost 20% this year from the highs that we saw in March. And on the other side of the spectrum, if you just look at oil, that's also headed for weekly loss, on the back of signs that the global economic slowdown and also the increasing interest rates globally are obviously going to threaten energy consumption. And obviously crude has struggled as demand in China, which is obviously the largest importer, remains subdued as the government there is pressing on with its COVID-0 policy. And already cases this week in China have persisted including in Shanghai in the run-up to the country's, critical twice-a-decade Communist Party Congress, which opens up this weekend. So it just shows you that, from all angles, gold and oil are getting hit from just a global perspective. And obviously, the mere fact that OPEC at this point in time is also trying to reduce their supply, unfortunately, does not even help them at this point in time.
Let's talk company news. Sun International saying it expects Sun City to have one of its best years ever. Talk us through that sentiment.
Yeah, you're right. I mean, they're expecting one of their best years in terms of their operating cash flow in the current financial year, especially following the disruption caused by COVID-19. I mean, just looking forward, what they've said, they're seeing a strong improvement and have set a target of 400 million in EBITDA in the next 2 to 3 years. I mean, COVID already cost Sun International about 150 million rand in operational costs in 2020 when it was closed for about 5 months due to the lockdown, and about 50 million rand in 2021, which is obviously on the back of the ups and downs that we saw with regards to closures and reopenings and the restrictions and curfews, etc. But the nice thing for them is that the occupancy at their hotels is running at close to 80%, which is at the highest point, which is, I think a good thing, especially in the travel and tourism sector. But interestingly enough, I think for them also, which is exciting, is the fact that the group last week announced an investment of 295 million in their Lefika Villas, which is obviously the first phase of expansion at the Sun Vacation Club, which is obviously on the back of their timeshare product that Sun City offers. I think they're going to be offering something like 60 luxury 3-bedroom villas. I think this is the first development since 2004, and it's the group's first major expansion since the pandemic. So obviously it shows how much huge confidence they have in building their business on the back of huge demand for travel, including the fact that people are now looking for self-catering and self-driving experiences at their vacation club getaways. And I think for Sun City, this actually bodes well, especially also for the Northwest community in terms of creating jobs and obviously expanding their operations there.
Very briefly, this last question, Mr. Thulare. Avenge, bagging 16 billion rand worth of new work despite the global inflationary pressures. Help us dissect those developments. Surely is good news for this company.
Very good news. I mean, I was sharing this with some colleagues of mine already. I mean, already if you think about Avenge, they're an infrastructure, resources and mining group. So obviously they've said that their Australasian-based subsidiary, which is McConnell Dowell, they've secured 16 billion rands worth of new work, which will secure about 98% of their revenue for the next financial year. I mean, already the Australian operations, they specialize in rail, marine, and other infrastructure construction in Australia, New Zealand, and Asia. So already, despite the global inflationary pressures, that's continued to be a factor in developing new tender submissions and obviously managing new and existing contracts. But I think at this point in time, what you are seeing is that despite all of this, the Avenge team, which since 2018 has been on a bid to restructure their business and dispose some of their non-core assets, they've sold things such as Trident Steel for about 700 million rand. You've seen this in a lot of construction companies where they're disposing non-core assets and also restructuring their books. And I think what you're also seeing is the fact that they've made huge headway in terms of their debt reduction and obviously making sure that the balance sheet is de-risking. And I think what you've just seen also over the past couple of months is them paying down about 75 million rands worth of debt. So obviously for them, this bodes well. And I think if anything, this should filter through also to the local economy where it will obviously boost the operations for Avenge and obviously highlight the significant work that the management team there has done.
Matete Thulare, thank you very much for that markets update.